Hey guys, this is Gabby from The Savvy Professor. In today's video, I will discuss the differences between FTIHX versus FSPSX. Watch till the end to know the final verdict on how they compare, but first, let's start with the differences. So the main difference between them is their investment strategies and performances. FTIHX, Fidelity Total International Index Fund, invests in a mix of developed and emerging market stocks, offering you exposure to developed and emerging markets. In addition, it has a higher yield from dividends and a longer track record. On the other hand, FSPSX, Fidelity Zero Total Market Index Fund, focuses solely on the U.S. developed market, tracking large-cap companies with a zero expense ratio, making it an extremely cost-effective option for U.S. market exposure. FSPSX has a lower expense ratio and has outperformed FTIHX regarding returns over the past few years. Therefore, FTIHX is more attractive as it has a higher dividend yield and allows you to diversify your investments. Expense ratios. FTIHX seeks to track the performance of its benchmark index, the MSCI ACWI ex-USA index, with minimal management fees. Its expense ratio is relatively low at 0.06%, which is competitive compared to other international index funds. The low expense ratio is due to its passive investment strategy, which aims to replicate the benchmark index's performance rather than actively managing the fund. FSPSX seeks to track the performance of its benchmark index, the MSCI ACWI index, focusing on cost efficiency. It has a competitive expense ratio of 0.04%, reflecting its index tracking strategy and focus on cost efficiency. FSPSX therefore appears to be slightly more attractive given its lower expense ratio. Holdings. FTIHX holds a broad range of international stocks, including large, mid, and small cap companies across various sectors and industries. Its benchmark index, the MSCI ACWI ex-USA index, includes stocks from 22 developed and 24 emerging markets, providing exposure to a wide range of global markets. Additionally, FTIHX's holdings are diversified across various sectors, including information technology, financials, healthcare, and consumer discretionary. FSPSX primarily focuses on large and mid-cap companies in developed markets. Its fund's benchmark index, the MSCI ACWI index, includes stocks from 21 developed markets, excluding the US and Canada. In addition, FSPSX's holdings are primarily focused on large-cap companies in sectors such as financials, healthcare, and consumer discretionary, among others. Therefore, FTIHX's broader investment scope appeals more to investors seeking exposure to a more comprehensive range of global markets. But do they have any similarities? Yes. They're similar in that they're both managed by Fidelity, a reputable investment management company. In addition, they're both passively managed index funds that seek to track the performance of their respective benchmark indices. To sum up, how do they compare? FTIHX versus FSPSX. I started my investment with FSPSX as it focuses solely on developed markets and has a lower expense ratio. However, I like FTIHX because it offers exposure to developed and emerging markets. However, it has a higher dividend yield and a broader investment scope. Therefore, FTIHX is the overall winner. Thanks for watching.